Consolidated Infrastructure was formerly known as the Buildworks Group and originally listed on the JSE in 2007. The company builds high voltage electrical substations through its power distribution subsidiary Conco. It has a market cap of 1.5 billion rand, a price to earnings ratio of 11.4, but currently pays no dividends. Paul?
So the original listed entity was almost, I think, a overnight failure. That was the sort of building materials, sand and tiles business. But it didn't really matter because Raul Gamsu, who's the guy who started Conco, saw this as an opportunity. They effectively reverse listed into that entity, issued themselves a whole lot of shares in exchange for the business, and that's why the name changed as well. So, he's the guy who is running it. He's also the guy that controls the company in terms of him and his family interests. And it's exactly that. It's building substations. So, every time there's like bad weather in Joburg, boom, Signa power station go, Kelvin B is down, half of the city's out. It's these guys that either need to put a new thing in or have teams that are involved with the distribution development. So there's a lot of that work to be done. Jonathan explained it earlier. The municipalities have all been sleeping. Surprise, surprise. So now, there's a lot of retrofitting. There's also networks which are developed with overhead cables that need to be replaced with underground ones, all that kind of stuff. They're about 60% South Africa, 40% outside of South Africa. But they're certainly well positioned. They delivered good numbers, and the share price has been rallying in the last year or two.
Well positioned indeed. Given the fact that, like you said a little earlier, these power stations that are going to be built.
And I mean, not only the power stations, we've seen now that the government's given the go-ahead for the renewable energy program with the IPPs, what are they? The independent power producers. There we go. Sorry, they. So, with the wind and the solar power stations which are going to come, they're going to be quite far away, and you need quite a lot of high voltage power lines to get that to the cities. So that's certainly very positive. They're quite in with a number of these, the people that have won the tenders. So, and you can see that coming through. They talk about the order book being up 33%. So that's quite exciting, and it certainly looks positive that for the next couple of years, it's going to be good for this company.
So, Paul, right time to get into this one.
Yeah, look, it's got about 1.5 billion rand market cap. So again, I keep coming back to this theme. The way the market is now, with a recovering economy globally, rising markets, there's nothing people like more than a new star on the block. And it's when they penetrate that sort of 1.5, 2 billion, 3 billion rand market cap that they start getting attention. Before that, nobody even wants to go to their results presentations. They send out their annual reports, people throw them in the bin. So it's breaking through. I think it could attract more interest. They're not paying dividends currently. They said, look, we'll use the money to grow the business. So I think as they mature in time, that could also be useful, is for them to start paying a dividend. So for the moment, I'm not sure how Mr. Gamsu is paying himself. But anyway, we'll get back to that. I think it's a good stock in a good sector, so hot for that, hot for me.
Jonathan, hot to know?
There are some good things coming through, but I'm just a little bit concerned. It's got a bit of a lazy balance sheet, if you want to call it that. I don't like the fact that it's not paying a dividend. I know it needs the cash because it's raised some more, it borrowed some more money so that it's got working capital so that it can implement on these projects that it's won. But I think there are better places to play. I think Ellie's would be more preferable, so not hot from this one.
So one hot and one not on CIL.